All right. Well, welcome everybody. Thanks so much for joining us today. Again, my name is Stephen Plocky. I might be a familiar face to some of you. I just want to thank you for continuing to join Midland Trust as we continue in our education series. Today is going to be a little bit different from past webinars that you may have attended, not just because I'm joined by my friend and colleague Alex Moore here today, but also because we're going to be talking about a section of business that Midland Trust also is involved in for tax deferral strategies that lay outside of IRAs, so at least typically lay outside of IRAs. This will be the 1031 exchange. Now, many of you are already involved in 1031 exchanges, maybe have done some in the past, or at least have maybe heard of them as you might be a real estate investor. But 1031s is an integral part of how real estate investment happens today. And so I'm joined here, as I mentioned, by Alex Moore, who's going to tell us a little bit about himself, also a little bit about Midland 1031. So as we get started today, Alex, just let us know a little bit about your experience with 1031s and what we can expect to hear about Midland 1031.
Sure thing, Stephen. Well, hey everyone. Stephen, thanks for having me on. So my name's Alex Moore. I've personally helped hundreds of real estate investors defer capital gains through the 1031 exchange process. And so in my time helping these investors preserve their gains for future investment opportunities, I've also identified common questions, mistakes, and missed opportunities for a smooth 1031 exchange that many investors find themselves in. A little bit about Midland. So Midland 1031 has been around for 25 years and has facilitated thousands of 1031 exchanges across the country. And we've helped real estate investors defer millions of dollars in taxes. Midland also has two certified exchange specialists on staff here, and we maintain a fidelity bond and professional insurance policy. We've handled simple exchanges and complex exchange transactions, and we've handled exchanges ranging from under $100,000 to over $10 million. And so that's one of the many reasons why I'm excited to share with all of you today, what real estate investors need to know about 1031 exchanges today. And so we can help you or help other investors get to that next level.
That's great. Thanks, Alex. As Alex alluded to already, 1031 exchanges have to do with tax deferral and preserving your capital while you're going from property to property in your real estate investing story. And so, Alex, just so that everyone here can just be on the same page, can you please describe to us what a 1031 exchange is exactly? That way we can just build from there.
Yeah, absolutely, Stephen. So at the heart of it, a 1031 exchange, it's a tax provision that was introduced into the United States in 1954. At its core, a 1031 exchange is a tax deferred strategy that's used commonly by real estate investors to defer the recognition of capital gains from the sale of real estate when another property or properties are purchased.
That's great. And so we can see already with this powerful tool that's available to real estate investors that there are many different strategies that investors can utilize in order to take advantage of 1031. But what I think I would like to impress upon our audience here is the benefits that the 1031 exchange offers to these investors and why you really should consider utilizing this as a strategy to continue your real estate investment journey. So obviously we covered tax deferral, but I want to touch on increased cash flow. This is something that's really exciting. As you reinvest your profits from a sale on a property into higher income properties, say you go from a house that you maybe purchased for $200,000, but now it's worth closer to $330,000. You're able to now purchase a larger property, maybe in the same area or maybe in a different market, to go ahead and increase the potential cash flow as a result of that newer larger property, all while preserving your capital gains and not getting taxed on them. Alex, I mentioned something a little bit about maybe going to a different market. Can you describe how 1031s can help investors with diversification of their real estate portfolio?
Yeah. Real estate investors they're able to move from one location to another. So let's say they have a property in one certain market, and then they find that a better opportunity elsewhere. Let's say it's in the same state, it could be in a different city, it could be in across the country. And so they're able to set up a 1031 exchange and go from one property to another somewhere else. And it's a really powerful tool that the 1031 exchange allows.
That's great. And I listed estate planning here because, something that might be on several of our, most past 1031 clients and maybe future 1031 clients is this idea of like, hey, like, I want to make sure that I'm building generational wealth through these properties. I want to be able to squeeze the most value out of this property as possible. One of the great beauties of a 1031 exchange, and I'm sure that you could speak to this a little bit, Alex, is when you go through the 1031 process and you defer your capital gains on a sale of a property to purchase a new property, if you don't sell that property outside of a 1031 exchange, but perhaps either keep that property or keep deferring your capital gains through multiple 1031 exchanges throughout the years, you are able to defer your capital gains tax to the point of death. And then that capital gains will never be collected by the beneficiaries who are going to be receiving this property. Is that correct?
Yes, that's correct. And so this is a great benefit of the 1031 exchange. If you have if you put your properties in the 1031 exchange, upon your death, um, your beneficiaries will receive the property with a stepped up basis. And so they won't be subject to the capital gains on the property, which makes this, really powerful, a great benefit.
Yeah. Thanks, Alex. Now, we've spoken about the benefits of 1031 exchanges. I'm sure many people here are already aware, like, hey, 1031s are great. I've done several myself. For those who aren't aware yet, however, of 1031 exchanges, let's talk about like who the 1031 is for. So, like, who can use a 1031 exchange? Alex, can you describe to us like what we typically see an individual or entity using a 1031 exchange for?
Yeah. So the people who set up 1031 exchanges, it's individuals, it can be trusts, partnerships, LLCs, corporations. The property ultimately has to be used for investment, business, income producing purposes. So that's the type that the property has to be used in that way in order for you to set up a 1031 exchange. Properties that are being lived in, that let's say you own it personally, you're using it personally, you live in it, you're unable to set up the 1031 exchange for that property. Residential properties that are being rented out, leased out, those can be 1031. Commercial property, vacant land, those are pretty common for the 1031 exchange. So we'll keep that in mind as we move forward.
Yeah. Alex, just to harp on a particular point, because rental income properties are some of the most like common 1031 exchanges that we see today, particularly with the advent of short-term leases. Are short-term leases eligible for a 1031 exchange property? Say you have a house that you use on Zillow or Airbnb. Are those properties able to be used in a 1031 exchange if maybe I'm not using it myself?
Yeah, great question. So a lot of clients they'll use services such as VRBO, Airbnb. So yeah, they're using it as a uh, income producing purpose where they're renting it out, using it for short term leases or short term stays for generating business. That is a business income producing activity. So as long as they are not using it personally at a later point in time. If they want to 1031 exchange the property into another opportunity, they'd be able to do so.
That's really good to hear, Alex. Yeah, I know that many of our investors have been able to use Verbo properties, Airbnb properties. So to know that there's an option available to them as well is really great to hear. And I think if we take a big step back and we can get into the rules and we can get into like what you can and can't do and when you need to finish things by, we can get into all that, and we will touch on those things later here today. But if we take a step back and look at what a 1031 really is and what it allows investors to accomplish, at the basis, it's this one thing: reinvestment, right? And so if you are using a property for business use, say it's a commercial property, as you mentioned, or maybe it's residential where people are renting it out from you. If you are doing that and you want to be able to, reinvest into your community, or maybe another community that you're interested in getting exposure to, that is the entire purpose behind a 1031 exchange, to encourage that type of reinvestment into communities. And so keeping that in mind, knowing what the purpose is, that will help us understand why we have certain rules given to us by the IRS about those 1031 exchanges. So that being said, let's transition then into what our real estate investors today need to know about the 1031 exchange process. What are some of the rules that you just cannot get anywhere without knowing? Alex, I'm going to go ahead and let you start up here about like-kind properties. Explain to us what that is, and help us understand the rest of those rules that we see there.
Yeah, excellent. Thanks, Stephen. So when we say like-kind properties, ultimately what we mean is that it's real property that's being exchanged. Real property includes vacant land, it includes residential property, it includes commercial property. So that is what like-kind property is. Situations where it wouldn't be like-kinds, mobile homes, sometimes they're not considered real property, sometimes they're considered personal property. You can't exchange vehicles, you can't exchange airplanes, anything like that. So it has to be classified as real property. Next, personal residences are not eligible. We touched on this earlier. Definitely want to drive this point home. Drive this point again. If you are currently living in a property or property and you're thinking about doing a 1031 exchange, you're unable to do it on a property that you're personally using. Like we said previously, has to be for investment or business use. For the next thing, the taxpayer that owns the current property must be on title for the new exchange property, no changes. Ultimately, it's the taxpayer who's doing the 1031 exchange, whether that's you in your personal name or if the property that you own, it's in an LLC, anything like that. It has to be the same taxpayer has to be the one that's taking title to the property that's being purchased. That was the previous title holder for the property that was being sold.
That's great. And we also have a couple other points that need to be considered. So those are just like, hey, who can use it and who can't, right? What type of properties, what individuals. But this is stuff that you have to know if you're actually in the exchange yourself. So say I have this property that I'm selling and I'm like, hey, I heard about a 1031 exchange. I heard, Alex Moore talk about a 1031 exchange on this webinar. This is something that I really feel strongly that I want to do. Maybe I want to move from up north down south and utilize the 1031 exchange in that sort of way, so that I can have investment properties where I'm living, in the same state as them. So maybe talk about some of these rules where, okay, you're in the 1031 exchange, what rules apply?
Yeah. So one of the most important things I think everyone should know about the 1031 exchange, if you're thinking about doing it, it's first that you have to set up the exchange before you close on the property you're selling. If you're thinking about doing the 1031 exchange, you have to decide before you sell it. If you close on the property you're selling and then you give a call to Midland 1031, for example, and now you decide that you want to do the 1031 exchange. Unfortunately, we're unable to facilitate it or set it up, as it requires that it has to be set up beforehand. So that's really important. You have to know before you close to set it up. Next would be you need to use a qualified intermediary to handle the exchange. So you're unable to set up the 1031 exchange yourself. You will need a qualified intermediary in order to facilitate the exchange, such as Midland. The next important point would be the identification period. So you have 45 days from the day you close on the property you're selling to identify up to 3 properties that you want to purchase within the 1031 exchange. What this means in terms of identifying properties, what we do is we send over a one-page form that lists the street address, city, state for the property where it's located. We need that to be filled out and identified to us before your 45-day identification period is up. So we have to be notified that here's a list of properties that I'm planning on purchasing. You can change your identifications as many times as you would like within that 45-day time period. However, after the 45 days has passed, it could be day 50, could be day 80, 100, you're unable to change or make any substitutions to this list.
Yeah.
So very important.
Yeah. I'll take the last two here, Alex. And if we have questions about these, we're taking questions in the chat that we'll be addressing at the end of our presentation. We want to make sure that we get out what we can about this. And if there are questions that remain, definitely we're happy to address those questions and maybe schedule a call in case your question is a little complex and needs that special attention. But the entire 1031 exchange process, happens within 180 days. So 6 months after you close on your relinquished property, that's when everything has to be accomplished by. You have to close on all of your replacement property or properties. And it's worth noting that these deadlines are extraordinarily strict. You can't just say to your qualified intermediary, hey, like, I had something come up this week. I'm not able to meet my 45 days. Can we schedule something out for like day 50 instead? That's not how this works. The qualified intermediary's job is to ensure that the IRS's rules and regulations and deadlines are being followed. And it's not within their ability to provide extensions or anything like that. So realize that when we're talking about the 45-day mark and the 180-day mark, these are not Midland deadlines that are coming up. These are written in the tax code when we're talking about 1031 exchanges in particular. So that's worth noting. It's can be a pretty fast process, but in case you need the full extension of those 45 days or the full extent of those 180 days, just realize that's when it has to be wrapped up. Well, that's good to hear, and I'm excited to see that we're getting questions in the chat here, and I'm really excited that we'll be able to address them later. But we're going to go ahead and move on to step by step what this 1031 process looks like. Alex, I don't know if you're anything like me, but when it comes to getting into a new process or getting into a new program or anything that's just new to me that I've never done before, it's really helpful to me to see things mapped out step by step so that I know, okay, I know what's expected of me and I know what I can anticipate to occur if I go down this path. And so that's what I want us to do for our audience today. If people are wanting to start this 1031 process, let's let them know what they're going to be doing, how they're going to work with the qualified intermediary and any attorneys or title companies. Like, let's go through step by step what they need to know if they're going to go into this 1031 process, shall we?
Absolutely. Let's do it.
All right. So Alex, if you want to just walk us through utilizing the qualified intermediary and securing a buyer and what this slide tells us about this process.
Yeah. So like what we said, you have to use a qualified intermediary for your exchange. The best time to actually begin the process is when you have a signed purchase and sale agreement. So when you go under contract with a buyer, it's fully executed. That's the perfect time for us to get involved. What we would need is for you to fill out our exchange information form and send a copy of your contract. You can do that online on our website. You can also give us a call to our number, and we'll be able to go over your entire situation with you. We'd love for you to give us a call, and we can go over um, everything the property you're selling, any thoughts or ideas on properties that you're purchasing. From there, once we have the completed exchange information form and we have your purchase and sale agreement, then what happens is we'll be creating exchange documentation that we'll be sending for you to sign. We'll be sending it to the taxpayer to sign. So if there's multiple people on title of the property, we'll be sending that for everyone to sign. We will also be creating exchange closing instructions. We'll be sending this to the title company or the attorney's office. Whoever's facilitating the actual closing for the property, we'll be in direct contact, and we'll be sending all the important items over to them that we'll need them to add on to the closing statement, and also some 1031 exchange documentation that we need to be signed. Next, after everything is signed and prepared, it's time for closing. So the closing statement or the settlement statement, it'll be updated with 1031 exchange language. We would also be signing on the closing statement as well. So the taxpayer would be the one signing. We also will have a signature line on the closing statement as well. So we'll need your approval to sign on behalf of the closing statement for both the sale and the purchase. And at closing, what happens is the proceeds of the sale are actually going to be wired over to Midland. So they're held in an escrow account. They're held here until the closing for your next property, or if you want to make a deposit or deposits on replacement property or properties. That's something that can be a really powerful tool. The funds are held in the escrow account here at Midland. Let's say you find a property or properties, you want to put a deposit. Instead of you going to the bank and wiring funds for that deposit, you can actually just have Midland do it, and send it from your 1031 exchange account. Also, the day 45, the 45-day identification period, and that 180-day exchange period begin immediately from when you close.
That's good. These are going to be the last few steps that we see in the 1031 exchange process. So after we close on that relinquished property, the property that you currently own, that's the term that is used, the relinquished property, and the 45-day and 180-day process begins. That's when you send us a copy of your contract and the replacement property information and review and sign your final exchange documents. So there's going to be another round of documentation for you to go through, because now we're talking about a brand new property. You sold the old one. Now we're talking about the new property. You're going to also review and sign the settlement statement, very important step. And then the proceeds of the sale that we just went through, hopefully within the last 6 months, are wired to the title company or attorney for closing. And then when you close on your purchases, now you can close on multiple properties as part of your exchange. It's one of the cool features. But if you close on all of your purchases and all of your exchanges, that's when your exchange is considered complete. You're no longer under any sort of deadline with 180 days. You've completed a 1031 exchange. And so if anyone has questions about that process, or is like, you know what, that is something I know that I want to do today, you can give us a call. We're going to have our numbers up at the end of the screen in case you either want more information or ready to get started. We're here to help you in this process. That's the whole purpose of this webinar, just to give you the information that you need to make a good, informed decision about this real estate investing journey, whether it's for yourself or it's whether for an investor that you're assisting, maybe as a realtor. So that being said, we also want to talk about why you would want to use Midland. Alex, you've been working for Midland 1031 for longer than I have. And so if you just want to give us a little bit of why we should consider utilizing Midland 1031 for our qualified intermediary needs.
Yeah, so Midland 1031's been a qualified intermediary service for 25 years. And so we also have 2 certified exchange specialists on staff. This is a phenomenal designation that we have. We also have a fidelity bond. We're insured. We're capable of handling standard, reverse, and improvement exchanges. Today, we've only discussed standard exchanges. There are what's called a reverse exchange and an improvement exchange, and we'll probably be doing that in a future webinar.
Mhm.
Another great thing, we can perform exchanges in every state in the United States. So if you are selling a property in Alaska and you want to purchase a property in Florida, we can help you out. So
Yeah, that's a really key feature for many of our investors here. And as we continue through this process, and if you're considering getting started or just want more information, where you're going to go is going to be midland1031.com. That's where we have all sorts of information, some of which I'll give you a preview of so that you can know what to look for if you're just looking for more information. There you can also complete the online exchange information form, the one that we talked about that starts this whole process. This is not you buying anything, it's just you letting Midland 1031 know, like, hey, I have properties that I'm trying to exchange. Let's see if we can make this work. That's the whole purpose of that form. And then that's when your Midland 1031 exchange specialist will be contacting you to see if this is something that you should be able to pursue given your circumstances. So very simple process to get started with Midland 1031, and that's by design. And Alex, as you said, you've done hundreds of them, been able to help hundreds of people perform these exchanges, and you are a testament to the ability of this institution to be able to perform it. So I'm really glad that you could join us here today. As promised, here are some of the resources that you can find on our website. Now, today we did discuss in general what a standard exchange is. It's when you sell the property that you have right now, and then you buy a replacement property with those funds. But in a reverse exchange, you buy a new property first, and then you sell the property you already have. It's a little bit more complicated than a standard exchange, but Midland 1031 can do that. Another thing that we see commonly, especially in Southwest Florida here recently, is improvement construction exchanges, where you're rehabbing a building or a property, and then you are trying to sell it. That is something also that Midland 1031 can do, and these are all things that you can learn about on our website, midland1031.com. And lastly, this one's near and dear to my heart because we will be seen on this page here shortly, Midland University. Midland University is a place where you can find all sorts of relevant video trainings or information on webinars that we've done in the past about 1031 exchanges. Now, Midland Trust, the IRA side of Midland, we also have a Midland University, but we decided that Midland 1031 needed one too. And so this is also an excellent place to find all sorts of really useful information. So I would definitely encourage you to go ahead and take a look at that. But that being said, I do want to turn our attention to the questions that our audience has here today. Thank you so much for joining us today. We're glad that you were able to stick in here with us, and we want to honor your time by answering some of the questions that you have today. So, Roberto, since you are our inaugural question here on this webinar, we want to make sure that we answer your question first. Thank you for bringing this up. You said now a 1031 exchange is performed outside of an IRA. Is that correct? I can speak to this, and Alex, if you want to throw a little bit more color on it, feel free to hop in. But in general, Roberto, yes, a 1031 exchange is typically done outside of an IRA. IRAs have special tax provisions within them in general that would prevent you from paying capital gains taxes when you sell a property. That's one of the beauties of an IRA. Just as if you were to buy a stock at $10 and sell it at $15, but you're not going to pay taxes on that $5 gain. Same is true for a property that you might own in an IRA. So 1031 exchanges typically done within within personal funds that you have or business funds, and not within IRA funds. Hope that makes sense. Thanks for that question. Okay, Michael, you said, I'm about to enter into escrow on a property. I want to do a 1031 exchange on who is the contact information with Midland that I should use. So if you're asking about who you should use at Midland 1031 in order to get the process started, we can introduce either one of us here. Our information is here, but we will be putting you in the hands of one of our exchange specialists here at Midland. So you feel free to use our contact information to get us talking with either the title company or anything that needs in order to get the front door in here. But as a reminder, at Midland 1031, we have a process in order for you to get started on your exchange. We need to have our exchange interest form completed so that we know what's going on. But if you've already gone through that process, feel free to use Alex or my contact information so that we can contact you. I'm just saying that because it's right here. All right, Alex, do you see Michael Noel's question about 1031 exchanges for investment property in foreign country? Can you perhaps speak to that and what a 1031 is and what it isn't when foreign countries are involved?
Yeah. So for the most part, individuals who are doing a 1031 exchange, it's for a property to property or properties within the United States only. You can do foreign real estate if the property that you're selling is in a foreign country as well. So it's foreign country to foreign country only. You can't go a property in the United States to a foreign country or a foreign country to the United States. This is a different type of exchange. Here at Midland, we don't facilitate foreign property exchanges. So you would have to call a different qualified intermediary for that.
Right. And to specify, these qualified intermediaries, they typically specialize in foreign exchange properties. So they're not even going to be called a 1031 when you're dealing with a foreign property. There's a particular phrasing and titling for these foreign exchanges that live outside of the 1031 nomenclature. So keep that in mind. If you call up 10 different 1031 exchange qualified intermediaries, you're like, man, none of them can do foreign country exchanges. That's because it won't be a 1031 exchange. It will be a different type of exchange. So keep that in mind, Michael. Hope that helps. We have another Michael asking a question. Michael Demeter asking, these can be held in your family trust, correct? Talking about properties and doing a 1031 exchange from your family trust in a 1031. Alex, do you want to hit on that?
Yep. So it's going to be if the property that you're selling is owned by the family trust and the property or property that you're purchasing in the 1031 exchange, you would want to keep it as the same taxpayer. So you'd be purchasing in the family trust as well.
Mm-hmm. That's good. Patricia, she has a question here. She says that she sold a residential property held in her LLC's name and don't want to purchase a new rental property. Can I keep these monies in a special type of account in perpetuity? And if I want to accept those monies at a later date, I would then be responsible for the capital gains or pass them on to my beneficiaries. Are these assumptions correct? And where the monies are invested. So basically she's asking, hey, not really interested in a 1031 exchange. I'm not looking to exchange the property, maybe getting out of the real estate investment business, but I do have these proceeds. Is there something I can do with those proceeds outside of a 1031 exchange to escape capital gains taxes? Alex, can you maybe describe where we're finding Patricia and the status of those funds now?
Yeah, ultimately, for this question, you'd have to speak with a CPA or a tax advisor if you're not looking to reinvest those funds into a new rental property. In order to get the full benefit of the 1031 exchange, you would have to reinvest those funds into another property or properties. If that's not your plan, if you're kind of looking to go a different route, you could speak with a CPA or tax advisor, and they probably can provide more clarity or another direction that you could go.
Yeah, at the end of the day, Patricia, because what you're looking to do is not a 1031. We really do not have much ability to speak on that. That could be a very specialized line in a tax code that a CPA would be able to assist you with in figuring out how to continue to push off your taxable liability. So definitely pursue the avenues that are available to you. But because it's not a 1031, that's not where our expertise is going to lie. So yeah, thanks for that, Alex. Grace Gilberti asks, she's in the process of trying to sell a condo hotel, and she did a 1031 with that property when she purchased, which is great. Good job, Grace. Really glad to hear that you're using this tool. But she wants to know, when the closing is scheduled, do we need to be involved at that point when she's selling her condo hotel? Alex, where is she in this process, and what does she need to do?
Yeah, so when you have the fully executed purchase and sale agreement, which when it's either scheduled to close, anything like that, the 1031 exchange has to be set up before you close. That's the major driving point here for you, Grace. If you have a contract, definitely give us a call and we can get the process started for you instead of waiting to the last second or anything like that. But we can get you started and make sure everything's good to go.
Yeah. Grace, if you aren't working with a qualified intermediary yet, and you're already talking about scheduling a closing time, now's the time to get a qualified intermediary. Complete our exchange interest form and begin that discussion so that we can be sure that we get all of our ducks in a row so that you can continue to defer your capital gains taxes. That's going to be crucial. Roberto asks two more questions. I'm going to handle the first one here. And if you want to answer the last question that you see there from Roberto, I think that would be good. And then Scott will take your question as well. Roberto asks, must all gains be reinvested? Could you pay capital gains taxes on amounts not reinvested? So Roberto, this is one of the interesting parts of a 1031 exchange. I'm really glad that you asked because I was hoping that we could talk about this. So thank you. So a 1031 exchange, Alex alluded to something a little bit earlier, talking about the full benefit of a 1031 exchange. The full benefit of a 1031 exchange is when the property that you are selling has a net selling price lower than the property that you are replacing or reinvesting into or upgrading to, right? Think of it this way. If you own perhaps a rental property worth about $200,000, you want to sell that and you want to purchase another property worth a little bit more, say around $230,000, congratulations. You deferred all of your capital gains tax because your net selling price of $200,000 is less than the net purchasing price of $230,000, right? So that $30,000 difference in price was able to guarantee you your full benefit of those 1031 exchanges. So all your capital gains are now being deferred, right? But what if it's the other way around? What if I have a property that I hold right now that's worth $230,000, but I'm purchasing or replacing, exchanging the property for something worth $200,000? So we're going from high to low here. Well, that's when you start opening yourself up to capital gains taxes, but it's not going to be on the whole $230,000. It's going to be the difference between your net selling price, your net purchasing price that you are eligible to receive capital gains taxes for. So to receive the full benefit of a 1031 exchange, net selling price must be lower than net purchasing price. However, you can still go through an exchange and defer the majority of your capital gains taxes by doing an exchange, even if you're exchanging for a property that's valued lower than your current property. So still a very useful tool. We see a lot of people doing this, even though they're exchanging for a lower value property, because they realize I'm going to pay way less in taxes than I am in Midland exchange fees. And that leads us to your next question. What are the fees for a standard Midland Trust exchange? Alex, can you tell us the standard exchange fee and what we charge for each closing on a property?
Yeah, so for a standard fee for the standard 1031 exchange, it's $995 for the qualified intermediary fee. There's a $30 wire fee, and then it's $250 per property that you end up purchasing within the 1031 exchange. So ultimately, if you were selling one property, buying one property, you'd be looking at $1,275 for the whole exchange. If you're purchasing more than one property, then you would just add $250 per.
Yeah, that's good. Yep, we keep it really simple, and those are flat fees. So we're not going to charge you more just based upon the value of your property. That $1,200. That's the same for if you're selling a property that's worth $150,000 or $1.5 million. Like, it's going to be the same flat fee. Okay, last question here. Scott asks, what offers the greatest benefits between 1031 exchange and land IRAs? And Scott, I like the way that you think, because this will be an upcoming webinar that we discuss the differences and similarities between 1031 exchanges in real estate and an IRA. I'll give you a little teaser here, but come back for when we do cover this in the near future, Scott. A 1031 exchange and a land IRA are similar in the sense that they are both tax deferral or tax sheltering strategies. With the 1031 exchange, you are able to sell a single property or multiple properties and be able to exchange it for a new property without paying capital gains taxes if you're using the full benefit of the 1031. Contrast that to an IRA. In an IRA, you are using funds that are just tax advantage from the get-go. If you're a traditional or in a simple or SEP IRA, that's typically pre-tax money. So you got a tax write-off when you put the money into the IRA. It's going to stay that way until you take it out. So you're not going to pay capital gains taxes on any sale of any investment while it's within the IRA. So that's how they're similar. Where they're different is you can use personal funds or business funds for properties that you acquire through a 1031 exchange, that you acquire and sell through a 1031 exchange. Whereas an IRA, you are only able to get benefit from a land IRA if the money is held within the IRA itself. Now, I don't know about you, but like the contribution limits that you see on like 401ks and IRAs, it ranges from $6,500 for the IRA, if you want to contribute, up to in the mid $20,000 for a 401k if you max out your benefit, right, for that year contribution. Contrast that to your personal income. You're probably making more than $20,000 a year, right? And so 1031 exchanges really just serve as an opportunity to take the personal income that you're receiving and turn it into more cash flowing opportunities on a rapidly scaling stage. Whereas, IRAs, we typically see land IRAs that come from like former employer plans, like not 1031s, from 401ks, different number, from 401ks that get rolled over into an IRA because of those higher contribution limits. And so there's a cap kind of on the amount of cash that you're able to play with those retirement accounts that doesn't exist for a 1031 exchange. So that's like one of the big differences. 1031 exchange, any income that you've received, you can utilize that for. IRAs, it's got to be a retirement fund. So it's usually segregated, usually a smaller balance that we're talking about. But those would be some of the differences and similarities. Again, the shared benefit is tax deferral, which leads to greater growth opportunities. But with that being said, I'm really grateful, Alex. Thank you for taking the time to spend with us talking about 1031 exchanges. If anyone here has any further questions, please call our offices. We're more than happy to help you. You can find us on social media as well. We also have a YouTube page where we're posting all of our webinars in addition to on our website. So if you're curious of like, hey, the Stephen guy, like, I wonder what else he's talked about, you can find out. Midland Trust YouTube page. But with that being said, thank you so much for spending your time with us, your afternoon, or if you're watching this on replay, thank you for taking the time out of your day to watch us on demand. For everyone who registered for the webinar, you're going to be receiving a link as soon as I hit the end event button here. That will enable you to watch the recording of this event on demand. So feel free to review anything that you might have questions about. If you're like, hey, I didn't quite grab Alex's number, I know I want to give him a call about 1031 exchanges, you're going to have the ability to view that on your time as well. So again, thanks so much for joining us. We're happy that you were able to spend time with us today, and thank you for choosing Midland. Have a great day.